Hi, I'm Roger Montgomery from Montgomery Investment Management, and I wanted to join you today to talk about what I found compelling in the Aura Private Credit Income Fund. When I first looked at the track record of the fund, I was a little bit taken aback. Not only had the fund outperformed the stock market, but it had done that with, listen for it, zero volatility. That's right. Unlike the stock market, which swings up and down at times, this fund has never had a negative month since its inception, including during COVID and the pandemic disruptions that were associated with that. So here's a fund that's been running for 7 years, produced a return of 9.64% compounded per annum, produced monthly income and never missed a month. It sounds too good to be true. What does it do? Well, it lends money to small and medium-sized corporates in Australia. Now, immediately you're going to think that's incredibly risky, and I did as well. But things have changed from 15 years ago. Before the global financial crisis, if you had said to me or invited me to lend to small and medium-sized corporates, I would have said, you've got rocks in your head. Quite simply, the only businesses we would be able to lend to were those the big banks had rejected. But post the GFC, and thanks to regulation, banks now require a lot more capital for certain types of lending, making those particular types of lending less profitable and more labour intensive. So consequently, they've pulled back from lending to small and medium-sized corporates. This has created an opportunity of about $400 billion in Australia, and that represents the gap between what small and medium-sized corporates in Australia would like to borrow and what's available to them from the big banks. And this has occurred at precisely the same time that baby boomers are heading towards their late 70s and 80s, precisely the time that regular monthly income becomes more valuable. Now, the features of this particular fund that make me more comfortable with it include the following. Number one, unlike other funds that have a concentrated book of large loans, the Aura Private Credit Income Fund has about 13,000 smaller loans spread across roughly 40 different industries and subsectors of the economy. Next, there's no lockup. Some funds lock you into those funds for 6 months or 12 months or maybe even longer, and this fund doesn't. Many other funds have long-term loans. So if the worst case scenario transpired and, for example, a major economic recession occurred and every investor wanted to get their money out at the same time, the fund would be gated. In other words, the ability to exit the fund would be tempered by the fund manager. If a fund has a concentrated pool of large long-term loans, say 2 or 3 year loans, it could take 2 or 3 years before you get most of your money back. The average term of the loan, or rather 75% of the loans in the Aura Private Credit Income Fund at the time we're recording this video, have a term of less than 3 months. And finally, the last feature that I like about this fund that gave me great comfort is the fact of a unique relationship, or rather a unique relationship between the investor in the fund itself, and the originators of the loans, the businesses that the fund has partnered with to identify and approve those loans. Those originators need to put up equity capital into the loan book as a first loss piece. What that means, quite simply, is that if there is an adverse event in any of the loans, the originator of the loan is required to put up their capital first, or to put their capital at risk first to cover those losses before it affects investors in the fund. And finally, let's just talk about that track record again. Private credit is gaining a foothold in many investors' portfolios. It's the topic du jour. Consequently, there's a plethora of new funds launching with no track record at all. This fund has a 7-year track record, returning 9.64% per annum, and that's after all fees. Now, there's a lot more detail. This really is a very high-level features and benefits chat to explain why I found this fund so compelling. I hope you dig a little bit deeper, find out a little bit more about the fund, and I look forward to answering your further questions. And if you have further questions, feel free to call me or send us an email. We'd be delighted to answer them. Look forward to talking with you again soon.